let's cut to the chase. You're investing your hard-earned money, but have you ever wondered, should you be putting it in stocks or options? Today, I'm breaking down the critical differences between these two and why understanding them is essential for every investor. I promise, by the end of this video, you'll have a clear idea of which one might be right for you, or if both have a place in your strategy. Now, let me warn you, this isn't going to be a boring lecture. I'm going to give you the real scoop on stocks versus options, from risks and rewards to when each one works best. I'll even share a few examples from my own trades to make it super clear. Sound good? Let's go. First up, let's talk about ownership. When you buy a stock, you're actually buying a piece of the company. You're a shareholder. And that means you own a tiny slice of that business. If the company does well, the stock price goes up, and so does the value of your investment. Plus, you might get dividends, a little bonus for being a shareholder. But remember, if the company tanks, so does your stock value. Options, on the other hand, don't give you ownership. They're more like a contract that gives you the right to buy or sell a stock at a specific price within a set time. Think of it like putting a reservation on that stock. If it goes in your favor, you can profit. But if it doesn't, you can just walk away. The lack of ownership can be both a good thing and a bad thing, depending on what you're trying to achieve. All right, next big difference, risk and reward. With stocks, your potential profit is theoretically unlimited if the stock keeps going up. But the downside, if the stock price drops to zero, you lose your entire investment. It's straightforward. Your gains and losses depend on how the stock performs. With options, the stakes can be way higher, both for profits and losses. Options allow you to leverage your investment, meaning you can control a lot more stock with less money up front. Sounds great, right? But here's the kicker. Options come with an expiration date. If the stock doesn't move in your favor by that date, your options could end up worthless and you lose the premium that you paid. So while the potential gains are huge, so's the risk. Let's bring this to life with an example. Say you think Apple's going to go up in the next few months. If you buy the stock at $225 a share, you'd need it to go above that price to make a profit. But if it drops below $225, you're losing value. Now let's look at the options route. You could buy a call option with a strike price of $225 and it might cost you, say, $5 per share or $500 for the contract. Now, you've got the right to buy Apple at $225 no matter how high it goes before expiration. If Apple jumps to $250, you're in the money and looking at a nice return. But if it stays below $225 by expiration, that $500 is gone. It's high stakes, but high rewards too. Another critical difference is time. Stocks don't come with a timer. You can hold them for as long as you want, years, even decades. This makes them ideal for long-term investors who want to ride out the ups and downs of the market. Options, however, are all about timing. Each option has an expiration date, which adds a bit of pressure. You're not just betting on the stock moving in a certain direction, you're betting on it moving within a specific time frame. This is what makes options so powerful, but also more complex. If timing the market isn't your strong suit, options might feel a little bit like a ticking clock. Here's another big one, income potential. With stocks, you can earn passive income if the company pays dividends, which is a great bonus for long-term holders. For example, if you hold stocks in companies like Coca-Cola or Citigroup, you'll receive dividends as part of your income. Options, on the other hand, don't pay dividends, but they have other ways to generate income. You could sell options on stocks you already own, like covered calls, to collect premiums. This way, you're essentially renting out your stocks for income. A bit like what I do with covered calls on my Citigroup shares, all right? I did that in this video right here, okay? If you're strategic with options, they can be a fantastic income booster, especially if you want monthly cash flow. Now, let's talk strategy. Stocks are generally straightforward. Buy and hold, wait for growth, maybe collect dividends. It's a set and forget kind of deal, which works for many investors, especially those looking for long-term steady growth. Options, though, open up a world of strategies. You can buy calls or puts, sell covered calls, trade spreads, and so much more. Options let you profit in any market conditions, up, down, or sideways. But here's the thing. These strategies require more knowledge and experience. If you're just getting started, options might feel a bit overwhelming, but with the right guidance, they can also be incredibly rewarding. So, stocks versus options, which one is right for you? If you want stability, long-term growth, and passive income, stocks are the way to go. They're simple, easy to understand, and come with fewer risks. But if you're looking to leverage your money, make short-term gains, or generate additional income through different strategies, options might be worth exploring. Remember, you don't have to choose just one or the other. Many investors, myself included, use a combination of both. Stocks provide the foundation for growth and stability, while options allow for flexibility, leverage, and income generation. It's about finding the right balance for your goals. If you're curious about how to integrate options with stocks to supercharge your portfolio, or if you want to dive deeper into specific strategies, hit the link in the description below to join my community. I share real trades that I'm making, strategies, and insights to help you navigate both stocks and options with confidence. And if you found this helpful, make sure you hit that subscribe button, and let's keep building your wealth together. And make sure you check out my next video where I go over how to turn your portfolio into a monthly income machine. All right, creating positive cash flow. I'll see you on the next one.